Hello, everybody. I am Randy Hilder. I am the Assistant Director of Market Regulation at the NAIC. And did I start a little bit early, or am I good? All right. Well, this is the Catastrophes and their Aftermath session, and we've got 4 esteemed panelists on the on our panel, and I will go ahead and turn it over to Ryan, and you guys can introduce yourselves.
Thank you, Randy. Good afternoon. I've never been called esteemed before, a lot of things, but that's nice of you. I'm Ryan Blakeney. I'm the Director of Consumer Affairs for the Mississippi Insurance Department. Excited to do this panel today. We got 3 great regulators to help us maneuver through this. Quick show of hands, any industry in here? Okay, I guess the rest are regulators, huh? Okay. All right, so we're going to jump right in. So what we're going to do, we're going to let everybody introduce themselves from their respective states and talk about the perils that affect their states and how that shaped their insurance markets. Start with you.
Absolutely. Thanks very much. And thanks for having me, everyone. My name is Mike Peterson. I'm the Deputy Commissioner on Climate and Sustainability at the California Department of Insurance, which is a very long title, but basically it means that I get to oversee all of our efforts that have to do with addressing wildfire risk, flood risk, earthquake risk, and the data that comes with those. And so, you know, when I think about California, we're a very large state geographically. We've got mountains and coastlines. We also have lots of different perils that, that do add shape to our market. So I want to kind of just walk through kind of one by one the main ones that really drive how we collect data and how we prepare for catastrophes. So it's very public that we have substantial wildfire risk in our state. We've had severe wildfires, and our most severe wildfires have come even in the last year. If you look at the state in general, we've had substantial growth of homes in the wild and urban interface where you do face more wildfire danger, you know, and in particular, wind-driven wildfire danger. There's probably 4 million homes in those areas. And so it's quite a bit of focus of our department. It's also quite a bit of focus of our insurance market because many, if not most, of those homeowners have insurance, and we collect data on those policyholders. We also have substantial risks of flood through what we call atmospheric rivers. Every year, half of our water supply comes from atmospheric rivers. 95% of our flood losses come from atmospheric rivers. And so it is a really important source of resources. It's also a very strong driver of how we think about expanding flood insurance in the state. And whereas in wildfire, we have substantial amount of people with wildfire coverage, less than 2% of California households have flood insurance coverage. And so these big events have a major impact, and it's a data collection issue because we don't have that same level of penetration of insurance to collect data on and plan from. The other 2 perils I wanted to mention are we have been facing significant heat waves, which don't cause traditional damage in the way that we might think about insurance, but cause quite a bit of business disruption, supply chain disruption, and some infrastructure and structural damage that we're starting to try to bring into our data collection. And lastly, the sort of biggest, but hopefully least frequent, is our earthquake risk. And that's something that has substantial fault lines in California. We have not had a major earthquake in a while, but we also have lots of moderate earthquakes. And even last week, there was one in our north coast area that was close enough to a population center to be of concern. And so I think that, you know, to the second part of the question here is like, how does this shape our market? How does this shape how we think about catastrophes and data? We have a lot of gaps in some of our major perils, and that's a problem not only for the protection gaps and the recovery of those communities, but also how on earth do you collect data where there isn't sort of an insurance basis to collect that information on. And so what that's driven our department to do, and we have an excellent data team, is to be able to look at what we can learn from wildfire and then try to go outside of the insurance sector to collect information to help bolster how we understand the flood market and markets for earthquake. I don't think I mentioned, but it's less than 15%. So in terms of uptake. So we really have these big gaps that we don't want to turn into data gaps. We want to try to make sure that we understand the risk as best as possible. These perils have also driven us to look both upstream and downstream of catastrophes. So after a catastrophe occurs, it's an atmospheric river. We don't have a whole lot of insured losses, but we have a lot of losses. It helps us go out and try to find data sets that might fit that. We also work with our interagency partners at like the Department of Water Resources to go upstream of those events and figure out where is there risk, what are the public resources for risk, and then how to turn that into communication tools for the public to hopefully, raise awareness for insurance. And then lastly, I'll just end with, we do have to be prepared that when we have major wildfires, that we are sort of wildfire ready, not just for our response, but for our data collection, so we can help the public understand what's happening and what we hope will happen next. So thanks very much for having me.
Thank you, Mike. Cheryl?
Hi, everybody. Can you hear me okay? My name is Cheryl Parker. I'm the Deputy Commissioner of Market Regulation in the great state of Florida, the large peninsula out in the middle of all of that water that we so love, all those beaches. I think everybody is very familiar with our hurricane risk, our big wind risk, storm surge, as well as, which causes flood, as well as the flash flooding from a lot of rain that comes in. Florida also is known for some of its wildfires. But what I wanted to bring here was maybe some things that you might not think about as being a catastrophe. We had a condominium collapse near Miami, Florida several years ago, which unfortunately killed quite a few people. And so that is a huge issue that we're looking at right now as far as like how old are those condos and how are they built. So that was a tremendous, just powerful pulling together of resources in Florida in order to respond to that and to move things forward there. And then I don't know if everybody remembers the 2010 oil spill from BP. So I think Ryan will remember it because it was headed for his state. A lot of us out there on the Gulf Coast were very worried about the damage that would be done by an oil spill. Florida brags that it has one of the most difficult and complicated insurance regulatory environments in the world. We have suffered a tremendous amount of ups and downs throughout our years, and we are also heavily into maintaining our data. We are very data rich in Florida in order to stay ahead of what's happening. We have lost upwards of 12 insurers to insolvency for a variety of reasons. But our market right now is on a turn because we did something that was quite amazing, which was our legislature passed tort reform. So in Florida, you can't have an attorney front the money on your lawsuit if you want to sue your insurance company. You got to have skin in the game. So it doesn't mean you can't sue your insurance company, but it means that you have to have a piece in there. They can't finance that for you. So we've had all of those things happen. We've had reductions in coverage. We've had changes in coverage. We've had massive rate increases. We've had the percentage deductibles apply. We now have a roof deductible that you can choose to try to make this insurance product more affordable in Florida. And of course, the non-renewals and insurers exiting meaningfully to exit is also something that we're working on. But because of tort reform, we also did away with AOB. You cannot have an assignment of benefits in Florida anymore. And those have made a tremendous improvement in our market. Our rates are coming down, not only in residential property, but also in private passenger auto. And so we're very proud of being able to use these efforts, and our legislature has listened to our input, and we've been able to see a meaningful improvement in our market.
Thank you, Cheryl. Brad?
Hi, everyone. My name is Brad Gerling. I am the manager of the Business Analytics and Statistics section for the Missouri Department of Insurance. As far as our market is concerned, this year and in the last few years, severe convective storms have been a problem child for us, especially this year. We actually just issued a data call a few months ago for severe convective storms, and the result of that data call has been eye-opening for this year. We have already paid as a market, we've paid $1.6 billion in losses. And we've been collecting zip code data on wind and hail losses since 1988. The most losses that we've ever had was 2 years ago. It was around $2.1 billion. So 1.6 billion in cat losses so far this year. I cannot wait to see what the total losses was for 2025, but we won't be able to figure that out until next year. We also have a fault zone in our New Madrid region. That's the boot heel of Missouri. We have not had substantial earthquakes in that region, but if you talk to the geologists, they'll tell you that an earthquake could happen at any point. But the problem is that that region is highly uninsured for earthquakes. It's a region of our state that's a little poor, and you know what limited extra income they have, they're probably not going to spend on earthquake coverage. But if an earthquake were to happen on the scale that the 1811, 1812 earthquake happened, everything would be destroyed in that area. So one thing that we have been promoting as a department over the last decade is earthquake awareness for that market down there. But yeah, I think as far as what we've seen as of late, convective storms have been our number one loss producer.
Thank you, Brad.
Yep.
Mississippi is seeing the same thing. Our convective storms are outrageous. They're scary. We've got the coastal area that's subject to it. We got earthquakes, wind, and then hail. Hail has been a major driver in our market right now, and we're seeing premiums increase, reduction in coverages, and it's hurting the consumer. So it's a major concern right now. I think that's across the board in the U.S. Hopefully, we're going to see those premiums start to come back down over the next 2 years. We're going to move over to partnering with our local emergency management teams. Can y'all speak a little bit about how y'all do that and what that looks like with your department?
Absolutely. So in California, we have partnerships with our emergency management teams, and those include both our emergency management services and the fire response themselves. And it happens in a couple ways, which I think is a good sort of prelude into what the aftermath of a disaster can look like if you have these partnerships, whereas if you don't. So prior to about 2018, we didn't have strong connections with those emergency management agencies prior to a disaster occurring, and then we would immediately go into disaster mode afterwards. But we've been able to put in place a couple policies, some data collection, but also starting in 2018, we had a change in law where after a governor-declared emergency wildfire occurs, there's actually a one-year moratorium for the zip codes impacted and those adjacent to it for insurance non-renewals. And in order to implement that, we need to work with those other agencies who set the perimeter for the wildfire, who set the perimeter that makes that an actionable law. And what that gives us is a really like a time in which we can work together that's not in the response. Even though it's after a major fire, it's more on the data gathering. And so what that has allowed us to do is to put together year-round information sharing agreements, year-round data sharing agreements, and sort of identify where there are gaps in preparation on the insurance sector side that we can then try to address by having stronger partnerships with local officials. Because as many of you might kind of have the experience is that after disaster at the local level, insurance isn't, everyone's like first jump to in terms of expertise. Most local officials are dealing with public safety, they're dealing with the initial steps of recovery, and then insurance questions come really fast and really, kind of with a lot of confusion. And so by being really well partnered with the emergency response agencies, we not only are able to implement these laws, but we can also combat misinformation really well. Because if we don't have sort of prearranged ways to answer questions, those questions will get answered incorrectly, and that's going to cause claims handling issues down the road. And so it really is our best opportunity to intercept problems as early as possible. Thanks.
Cheryl, anything?
So Governor DeSantis can build a bridge in 3 days from an off the coast island that got cut off, and And so our emergency management folks are just prime at what they do. Our most favorite thing is to see all of the bucket trucks lined up. Some of them may be actually sighted off into your state. And then we see them roll in along with the gas trucks and a variety of other resources that come in. And this takes a lot of practice. And Florida, unfortunately, has had a tremendous amount of practice. We can get the National Guard into wherever we need it. My team can be on the ground as soon as I can figure out what hotel has maybe got air conditioning in it, so that way we can get out there and be on the ground. But I think a lot of folks don't recognize that the emergency management response starts at the county level. If your county emergency management doesn't know what its needs are, it can't communicate it up to the state level. And so our state emergency management begins that communication. It maintains that communication year-round to make sure that our counties are aware that they can ask for anything that they need, and they will get it. So they have a tremendous amount of, like, we can get a generator on the stoplights in an affected area that's had power outage in about a matter of hours by our Department of Transportation. Our highway safety folks are out there. Search and rescue is out there in a matter of minutes, and we have military-grade drones up as soon as the FAA will clear the winds and allow them to go get those photos. So it is a tremendous pulling together of resources that I'm always very astounded by. One of our commissioners said that if you go into our emergency management system building during a storm, it's disturbing because it's very military. It's full of military. It's full of guns and boots and all kinds of things going on, but you couldn't feel safer if you needed it. So I can only tell you that the communication. If you don't know who your state emergency management folks are, I recommend that you just put your hand across the aisle and go and get that communication going, because you don't know if you're going to need them, and they certainly are going to need you. We pay them back by doing very unusual things. After Hurricane Ian, we had boats. We had boats everywhere. We had boats up trees. We had boats stuck in between apartment buildings. We had more boats. I didn't know we had so many boats. Boats everywhere. And we had electric vehicles, EVs. And that's when the batteries started exploding. And when they do, the fire departments didn't know how to put it out. NHTSA had to come in, the feds had to come in and figure out what are we gonna do with these flooded EVs, because they're dangerous. You can't put them and store them next to each other, because once one goes, they're all gonna go, and they have to burn out. So it was a tremendous safety issue that was going on. So we actually did a reverse data call. We had to ask the insurers, we do this routinely, because they don't care who moves the boat, but they want to be reimbursed for moving the boat. So if Geico owns the boat or State Farm insures the boat, somebody's going to move that boat, and we have to know who it belongs to. So we do a reverse data call. We don't want to know who it's insured by. We don't want to know the policyholder's name. We don't want to know the value of the boat. We want to know the whole number. We need to know the name of the boat if they captured it. We need to know a variety of different little things that they can tell us that they have on the underwriting of their boats and their EVs, so that we can locate, and whenever it comes time to do the backside of FEMA, when the federal government pays for something, they typically want to know if there's insurance involved. And so that's how we pay our emergency management folks back, is by helping them to identify where there might be insurance coverage on unique things like that.
So yeah, Mississippi is like the same. We have an elected commissioner. So after a storm, we are boots on the ground, typically within hours. After the Louisville tornado, we flew back from NAIC a day early, and that storm, we knew the storm system was going to move through, and it demolished Rolling Fork, Mississippi. I don't know if y'all saw that. It was an F4, maybe right at the tail end of an F4, or maybe small F5, but it's when you go to those things, it's sobering to see the damage that exists, and we're there to determine as Cheryl indicated, what is insured, what is not insured, what's going to be MEMA, what's going to be FEMA, and it's important that we can get people back on their feet. So I appreciate that. Brad, we may let you jump in here, so we're running short on time, let you do your data, and we'll pick back up on claims.
So I was going to present today on a recent catastrophe that Missouri has experienced. On May 16th, an EF3 tornado ripped through parts of the St. Louis metropolitan area with a maximum wind speed of 152 miles per hour. The estimated cost of this event was $1.6 billion. It is considered the costliest weather event in Missouri since the Joplin tornado. Despite the catastrophic losses, the insured losses are only projected to be at $330 million. That's just 21% of the total. To put that into perspective, the Insurance Information Institute estimates that 52% of catastrophic losses were covered in 2024. So that begs the question, what happened in St. Louis? On May 20th, Director Nelson visited St. Louis to talk with the public and the media about our department's response to the tornado. While she was there, she was able to pick up on the fact that some of the houses that were destroyed may have been uninsured. So when she returned to the office, she tasked my team with trying to estimate the uninsured rates for St. Louis. So we had our task. We knew that we needed to calculate the uninsured rates, but we didn't know how to do that at first. But the math is actually really simple. If you know the total number of dwellings, and you know the number of dwellings with coverage, then you should be able to figure out the number of dwellings without coverage. So the only trick, though, is that you need to find those two metrics. Fortunately for us, we've been collecting a data set since 1988 that has the number of dwellings with coverage in it. So we were able to leverage that for this assignment. But then we had to find a data set that had the total number of homes in the same zip codes that the tornado hit. So we relied on the American Community Survey to provide that information for us. Once we got the two metrics, we calculated the uninsured rates and figured out that yes, there was in fact an uninsured issue in the St. Louis zip codes that were affected by the tornado. We estimated that as high as 70% of owner-occupied dwellings and 90% of renter-occupied dwellings were uninsured in the St. Louis zip codes affected by the tornado. So before I move on, I'd just like to point out that these are estimates, and if you choose to do your own uninsured estimate analysis, just keep in mind that there's an associated margin of error that needs to be factored in. In fact, the American Community Survey publishes these margin of errors with the estimates that they have. And in general, the smaller the population of the geography, the greater the margin of error, and the lower the reliability of the estimate. So, I wanted to show a little bit of the, it didn't switch over. Still, I was trying to show a tool that we used in our analysis. Okay. Well, we used a tool that the National Weather Service puts out there that's called the Damage Assessment Toolkit. And it's a map that shows, I don't know who's familiar with it, but the National Weather Service goes out into the community and they assess the damage after a major catastrophe. And the data that they collect, they actually put into a map. That map is available just days after the catastrophe, and it will show you the damage points that were located on that catastrophe. So, for instance, the map that I was going to show you, it has the path of the tornado, and you can understand what, like for us, what zip codes were impacted by the tornado. So the way that this map works is it has specific damage points along the path, and the points are actually color-coded based off the level of damage that they assess for those specific points. What was really interesting about this is that it's developed in a tool called ArcGIS, and you can actually take the data that they have in the tool and apply it to your own map. I'd like to be able to show it to you. Oh, perfect. Yes. Oh, okay. I'll do that. Ah, perfect. All right, thank you. Okay, so this is the map that I was talking to you about. The individual points are the damage points along the tornado. The orange and the yellow points are the points of highest damage that we see from this tornado. And like I said, we borrowed this data and we applied it to our own map. And that is the map there. So the points that you see, those are from the National Weather Service, but we overlaid it on top of an uninsured map. So the map in the background actually shows you the uninsured rates for those specific zip codes. So the more red, the more bold the colors are, the higher the uninsured rate for that zip code. So what we saw from this visualization is that our orange and yellow points are actually in the zip codes that have the highest uninsured rate. What does that mean? It means that the communities that were least prepared for this disaster from an insurance perspective actually had the worst experience from this tornado. The worst part of the tornado hit them. Okay, so once we had a way of calculating the uninsured rate, we wanted to turn to the state as a whole. And we're actually created this Tableau dashboard that shows the uninsured rates for the entire state of Missouri. The first thing we wanted to look at were our two major cities in Missouri. We have St. Louis and Kansas City. Obviously, we've looked at St. Louis already, but what we notice about St. Louis is that, yes, there are some zip codes in St. Louis that have high uninsured rates, but for the most part, that city is actually low uninsured. Same for Kansas City. There's a few zip codes in Kansas City that have high uninsured rates, but for the most part, Kansas City is well insured. The part of the state that's actually the highest uninsured is our northern part. And what do we know about northern Missouri? We know that northern Missouri is highly agricultural, and that anecdotally we know that these farms have been passed down from generation to generation, and that the mortgage on those properties likely been paid off for years. And people probably don't feel much of a need to purchase homeowners coverage in those regions. What's funny about this is that we heard the exact same thing after the tornado in St. Louis. We heard that the houses that were damaged were generational, that they were passed down from generation to generation, that the mortgage was likely paid off a long time ago, and they didn't purchase coverage because of that. So we have this pattern that's similar between St. Louis and northern Missouri. And what do we wanted to try to get some sort of data to support the stories that we were hearing. So we turned back to the American Community Survey and found a point for the number of owner-occupied houses with a mortgage, and compared that with the total number of owner-occupied homes. And what we found was that, yes, in northern Missouri and in St. Louis, there was a low proportion of homes with a mortgage versus the number of homes in those regions. So we had some additional support to the stories that we were hearing. Okay. So what's our next step? So we were able to perform this analysis. what we want to do is we want to perform that on an annual basis. We want to try to produce this report that shows the improvements or deterioration in the uninsured rates as time goes on. And what we can do with that is as catastrophes occur, we'll be able to better inform local governments and be able to better assess the situation from the get-go. The second thing is that we'll be able to better educate the public about the importance of obtaining homeowners coverage and if another catastrophe were to occur, why they should be better prepared for it. So that ends my presentation. I think we're going to hold questions until the end, but I do have my email address up there. If you have any questions, feel free to send me questions through there. Thank you all.
Thank you, Brad. I was discussing over there with Mike if he had that technology. He said he doesn't think so. It's pretty in depth. It's neat. You want to talk a little bit about California's data calls and what they do after an event?
Yeah, absolutely. I that was a great presentation, Brad. And just to excuse me, underscore one thing he said, we get a lot of questions on our data calls, especially after a catastrophe, from local officials. And so I think that to the degree to which you're planning your communications for the general public, for policyholders, that local elected officials, local agencies have become a bigger and bigger portion of our pie chart of questions. And so I think having information that's more actionable for them, like something like this, is really important. And that underinsurance, uninsurance question is something that came up a lot after our most recent severe fires in Los Angeles, because there was a want to make sure services got to areas that maybe were uninsured. So so that's on that. On our data calls, I feel like there's like, it's like having fast twitch and slow twitch muscles. We have our fast twitch data calls and our slow twitch data calls. After the recent January wildfires in Los Angeles, for the first time, we tried to be as fast as possible with the data call. And it turned out that speed was essential because there was so much misinformation after the event that unless we had information about how the insurance sector was responding, that silence was going to be filled by inaccuracies. And so we actually did a data call within about 2 weeks, and we got just information that was trying to show what was the immediate progress in insurance policies providing funds to the policyholders. And in California, there are some automatic funds that go to policyholders related to the additional living expenses and to contents coverage if you have a total loss. So as soon as the total loss was determined, that money could move, and we could show the public that that was occurring, and that provided a lot of confidence that the insurance industry was not retreating from any responsibilities in the wake of this moment. Most of our data calls take maybe 2 to 3 months to implement. That's more of the slow twitch side. And so I think that what I'd say that is relevant to these catastrophes is that both have been really important for us. If we have that annual kind of slow twitch data call, then we're ready before the catastrophe, knowing what's going on in the market in terms of levels of insurance and which companies have exposures in which areas, so that we can do something really fast after the catastrophe occurs. And that was most important in these recent fires when we were trying to set up our workshops to help policyholders meet with their insurers. Within moments of the fire occurring, because we had data at a zip code level and we knew which insurance companies were highly exposed in areas, we knew what the top 10 companies were in these different zip codes, and we could set up community workshops with those insurers there, and those policyholders walked out with their first check 2 weeks later. So it really is empowering to have that slow twitch data to go along with that quick turnaround.
Thank you, Mike. Cheryl, I know y'all have a yearly market call, correct?
We actually have over 30 data calls that Florida monitors, and our financial data now comes into us monthly. We call it the MER. It used to be Quasar. I know, Commissioner likes dynamic data names, but we'll stick with catastrophe. But we have the catastrophe reporting form, and within 24 hours of a storm's hit, the residential property carriers know that they have to start reporting data to us. So we, on a daily basis, get what we call the short form of the catastrophe reporting. We're mostly looking for the big thing that they focus on in Florida is how many claims are closed without payment. For some reason or another, that misinformation that we all fight against, they automatically think that the insurers are just closing claims. And so probably about 30 days to 6 weeks after the storm, then we'll go to the long form. And it's a very long form. We're asking a variety of how many claims have been closed in 30 days, how many claims have been closed in 60, 90, how many have an attorney assigned to them. It's just a huge form. And, you know, trust me, if you are not a state that has been doing data calls and you're thinking about doing them, you be prepared to have to navigate questions from your industry because they're going to want to understand what you're using it for. Market conduct in Florida is required to do mandatory hurricane exams 18 months after landfall. And there's two requirements. We're looking at a ratio of complaint to claims, and we're looking at the highest ratio of claims closed without payment, which gets kind of difficult whenever your storm is mostly water, which if you go back to 2024 storms, we had 3 storms that were mostly flood related. So I don't have a whole lot of wind complaints, but we did have a large number of claims closed without payment. Does anybody know why? Because FEMA requires a denial letter from the wind carrier before they will provide funds for flooding. This is a huge administrative burden to our residential property carriers that they have to issue these denials for something that we know for a fact that there's no coverage for. So that is part of the reason why the claims closed without payment is large in Florida. So if you see some of these press releases, this is the misinformation that we're trying to work against. But Florida is a very public record state, and our claims, our catastrophe claims reporting is reported in the aggregate because a lot of the companies will report their data as trade secrets. So again, that could be something that you'll have to navigate in your state if you're starting to collect data from your insurers. But we do it in the aggregate, and so that way you can't, you know, re-engineer it, reverse engineer it. And you really get a chance to see a lot of what's happening. We see the full data set. Market Reg is monitoring that all the time. We have some very specific claims statutes. We can go and call an exam at any time. I don't have to wait 18 months. But you all know, if you were in Market Reg, that, you know, we're a long-tailed industry, meaning that if I call an exam too soon, I'm not going to see the full picture of what they did. And just recently, the commissioner issued out his press release that we finished, well, we've got a total of 10, but we finished 8 of the hurricane exams from 2024 season. Well, it was Hurricane Ian and Hurricane Idalia, so you had a couple of seasons in there. And those got a combination of over $2 million in penalties for. So even though these insurers are used to hurricane claims, there's always a way to improve on how they're performing.
Thank you, Cheryl. So that's a good segue into the claim handling process. So Consumer Affairs, I remember back in the day when it was heavy life and health complaints. I ran the numbers before we came here. Our complaint level on the property and casualty side is 72% of our complaints we receive. So does that mean the industry's doing a bad job? Is there more storms? I can't answer that question. Since there's not many insurers in here, I will say that I think they're doing a poor job. That's just what I believe and what the data shows. You know, handling claims, you see the good and the bad. If you had one magic or silver bullet that insurers could do to make claim handling better, what would you suggest?
I think that the most effective thing I've seen is that if for the least controversial or least difficult pieces of the claim, for those to move as quickly as possible. It's good for the consumer because they can start to rebuild their lives, not their home necessarily, but it also just takes issues off the table and lets those ones that are more sticky be the ones that you know, everyone only has 24 hours in a day, like let's concentrate on what's most difficult. I can say that in the first couple months, I'll just say as of last week when we got our latest data on the LA fires, 39,000 out of 42,000 claims had partial payment on them. So for most of those claims, there is an average of, the numbers won't necessarily mean anything because it's all relative to where these areas are, but but a substantial amount of money has moved. That's a positive. And then that means that we can focus on what has become the most persistent problem, which are smoke claims from these fires. These were heavily urbanized fires. And so I think that that's not necessarily a silver bullet, because I don't want to say that, but it has helped us focus on what is difficult and move some of the issues that are a more consensus quicker. And that also just takes pressure off of the consumer in terms of what they're frustrated with in terms of their insurer. And we can just fight over the things that are most troublesome.
Thank you, Mike. Cheryl?
Communication, and more communication. There is no such thing as over-communicating about a claim. And that's whether it comes from the regulator, or whether most especially it comes from the insurer. For us, we all know that we have to battle that negative press, all of the neighbors talking to neighbors saying, I hired this guy or that guy, and all of the ramifications from that. Everybody's nodding their head going, yeah, I've heard that story. And you really, I think for a long time the insurers got used to just doing claims handling from their home offices. And, back in the day, in the old days, they would all get retail space at ground zero, right? Does everyone remember? And people would actually go into the office and you could get a check. And we're watching them go back to that. So our insurance payment villages, we highly encourage all of even our little guys to come and get out there, but we'd like to see them set up a retail space, so that way, even if it's not manned all the time, but at least have people there, set hours, so that consumers can actually walk in and talk to people and get a check. We want decision makers there. We do not want somebody who's just going to take a message and hope that somebody calls you back. We're expecting that they answer, and they answer quickly. Florida law allows 7 days for a response to a claims communication. In today's day and age, that is a long time. Think about it. We're used to getting automatic responses. So they have the ability to create this technology in their claim systems, update your claim systems, so that way if you get an email, you should have an immediate response that says, we got your email. It's not hard. The name of your adjuster should be on every communication that you receive, because then you know who it is. So there's just a variety of different things that Florida put into place. And we tell the companies, nobody is more powerful in their messaging than they are. We can only do so much as the regulator, but we expect them to have their voice out there, and because they're the ones who made the promise to the consumer.
Thank you. In Mississippi, we're seeing heavy activity with a particular company, but I won't get into the weeds on that one. But there is an appetite right now in our legislature to put a limit on personal contents. And if a storm comes through and it hits, say, 60% of a home's value, insurer is required to pay out half of the personal contents. That would be a step in the right direction. It gives the consumer some money so they can get started. This stuff about going and getting receipts for a couch that's 17 years old is not going to work. And that's where consumers are really seeing issues with their insurance carrier, and they're losing hope in them. And then it results in a complaint to the department. So I'm hoping that law gets some traction and the statute gets through. I think there's one state that has a law similar to that, but we're trying to model that legislation. So we've talked about before, during, and now let's talk about after. Restoring the community after a catastrophe. Cheryl, I believe Florida has a mitigation program, correct, in some form or fashion. Can you talk a little bit about that?
Yeah, so if anybody knows Florida well enough, they've heard me use the word bifurcated. Our regulatory structure is bifurcated between the Florida Department of Financial Services, who is the elected chief financial officer, Blaise Ngolius, and our commissioner, Mike Jaworski, is appointed, and we actually are housed administratively with the Department of Financial Services. So it's a unique setup. It's one that most states don't have to navigate, but we have the My Safe Florida Home program that is the mitigation that started in 2007, and it has been providing grants to Floridians for years, and luckily the legislature has continued to fund it. What you will find is, we love to do this after a storm, because it makes proof that building codes work. Building codes work. You can actually see before and after on any given hurricane, and you can see which houses had the building code upgrade as early as 2010. 1998 is when we learned that faulty building codes kill people, and that was Hurricane Andrew. So Florida has been a proponent and just really driving behind getting the building codes in there. If you do this, you get a really good discount. So we've been trying to, do these grants. But there's so many people, and we're grateful. It's so great that usually by the time that the money is put in the bank, that it's been spent. We've got people that have been sitting on the waiting list for a long time, and we tell them to stay there because it works. So it's great fun to take a look at those before and afters and see what buildings were left standing with very little damage compared to the ones that were basically taken off of their foundation.
Yeah, if you've got time, check out the Hurricane Sally study. I believe that's what it is for Alabama. It's remarkable. It shows the difference in what was mitigated and what was not, of what was left. It's crazy. Mike, can we add something?
Yeah, just very briefly. I couldn't say more about the Hurricane Sally study. It's incredible. Just last week, the California legislature passed a bill to authorize my department to create a wildfire mitigation program, a grant program. I think it's the first one in the country, and so we will be building that. Many thanks to Alabama Commissioner Mark Fowler for coming to California and helping advocate for that, because I think it'll be a really big tool for us moving forward. And also, in the aftermath of these events, it helps us talk about what is the path to a more sustainable way forward for these communities. And if we have evidence from that mitigation works, it's a powerful argument that I think insurance regulators have to lead on, because no one else is coming to make that argument.
Yeah, a mitigation is the answer for the homeowners market. It's going to be there. It's going to protect your home. It's going to make it stronger. There's discounts. Insurers love it. So they're not going to be able to price their way out of this thing, because it's going to become unaffordable at some point for the consumer. We've got 2 minutes. Questions?
I'll ask one quick question. Ryan, back to your comment about silver bullets that insurers can do, maybe to enhance their claim servicing and response. If you could pick one or two things, just based on what you see, you put it, Ryan. Would you say it's setting a proper expectation? So back to your question. Hear me? Back to your question on a silver bullet that insurers can do to enhance and improve claim servicing. Would you say setting a proper expectation is missing for the policyholder on the front end, or is it having singular ownership of a claim? Because we've seen both of those things change.
That's such a great question. I think that it's yes to both. And, there is no single bullet. There's no magical answer to all of the things that we face, because there's so much misinformation, social media. We get a variety of people that come in that aren't licensed, and there's just so much to battle. But I think 100% correct is that if we arm our consumers, knowledge is power, and a lot of them don't think they can navigate this. And so a lot of what we do is go out there and say, you can do this. This is something you can do, and if you come into us and help, we're gonna help you navigate it. If your insurance company is lagging behind, we're gonna get in there and tell them to move along. I actually have a residential property carrier in Florida that told us recently that he had challenged his claims department to pay claims in 60 minutes. He wants to see their metrics improve claim payments, not down to days, but he wants to see it within hours. And I was really excited. I'm like, I want to see you make that happen. So I'm gonna hold him to it.
Ryan, I have a question back here. Ryan, one question. Here. Can you hear me?
Yeah.
All right. Brad, I have a question for you. Your report is fantastic. Have you overlaid income on those areas of no insurance to look at, is this a financial and affordability issue, or is this just a personal issue that I've chosen? I have the income, but I've just chosen not to spend it.
Yeah, that's a great question. We have looked at median income. That is something that the American Community Survey also provides. The dashboard that I showed you, the map, it actually has a number of metrics that I didn't show off, but it has like 6 or 7 metrics that will change the map based off of a certain factor. So actually, yes, we have looked at median income, and we do think that median income is a factor in the lack of insurance in the St. Louis region. I would say that it's probably 2 things. You know, one, there's been a generational passing on of the house from generation to generation, and that mentality, I think, is producing some sort of like, okay, well, we don't have a mortgage. I don't feel like I need the coverage right now. But is that motivated by a lack of income? I think so. You know, the zip codes that were impacted the worst in St. Louis also have the lowest median income in the St. Louis region. So there's probably an expendable income issue there as well. Yeah.
What about the northern state with the farmers and the ranchers?
Yeah, so I haven't looked lately at the northern part of the state, but I would guess that it's low to middle income as far as the median income for the rest of the state as compared to the rest of the state. It would be low to medium middle income. But I would say that could definitely be a contributing factor for that part of the state as well.
All right, appreciate y'all very much. Thank you for coming.